Hello and welcome to another update video on ADA. Yeah, I'm here currently tracking the 1 hour time frame chart, and I think in yesterday's video update we were actually watching for that fifth wave to the upside, or we were actually, I think it was already forming when I made that video yesterday. And I gotta say, again, this is the 1 hour time frame. Over the last few days I showed you again and again the weekly time frame as well, just to give you a good idea of the context. And I mean, look at this. It is a weak uptrend and everything, but I can't deny that it does look a bit like a 5-wave move up. It's a very weak one, and there are surely other interpretations possible. I can easily find a way to count that as a correction. But so I think it's important to recognize this is not a very clear 5-wave move, and it's definitely not an impulse. So I don't trust it, but I'm tracking here how, let's say it like that, I'm tracking here how an upside reversal would look like. Yeah, this does not guarantee a reversal. Do I have high confidence in a reversal? Not really, okay? However, this is how it could look. 5 waves up, potentially done, can still extend. It's important for this upside reversal to take more shape, for the market to stay above the 39.8 cent level. Reminder here, the 78.6 retracement is the key level that needs to hold in any wave 2 pullback. So if this is actually genuinely a wave 2 pullback, which should form a higher low, if it is, yeah, then the market should ideally not break below the 78.6 retracement at 39.8 cents. That is an important support for any wave 2 pullback. Any break below is an indication that sentiment is still bearish. We're likely heading lower. So what we can identify here is an initial 3-wave move up in wave 1. Then we had this wave 2, A, B, C in wave 3, wave 4, A, B, C in wave 5. It's a weak wave 5. I can't rule out some further extensions. We are moving in the price channel. I'd say a break below the lower boundary line of the price channel would be an indication that wave 1 is topped, because this is a diagonal, so it might still stretch. So I would pay attention to the lower boundary line here for support. If we break below it, you've got 3 fib levels here at 41.2 cents, 40.6, and 39.8 cents. But that's simply a set of fib levels to watch. This is not in any way any convincing upside reversal. We haven't even broken above any significant swing high. So there's just much more work needed, yeah, from the bulls. And once we have the pullback complete, and that might not happen before next week, then if we see any further upside, these are the 5 waves I want to see completed to really be a bit more confident that actually a meaningful low has formed. I really do need to see these 5 waves, circle 1 to circle 5. And then afterwards, we can add support for this corrective pullback in a larger 1-2 setup. This would be a wave 2. So that's how I see ADA. Not too much going on at the moment. We might have started a pullback though of sorts. I'm tracking something similar for Bitcoin as well. Yeah, there are many ways how this could take shape. I mean, the pullback scenario would be this, like A, B, C, and potentially already in wave 2. Yeah, I'll keep watching. Yeah, but bottom line is, as long as we're holding 39.8 cents, the market has a chance to carry on, even though it's not a very strong trend. And so, yeah, I don't expect too much action here over this weekend. So I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. If you're interested in additional updates, then check out our membership options on the weekend. On Sunday, we're running our member live stream again, where you can request coins, charts, and we typically cover, I'd say, at least 30 coins in every live stream. At the moment, we still have our Black Friday week offer for 20% off our annual memberships. With the gold membership, you get the full experience, plus a lot of additional updates, TradingView live charts, an Elliott Wave course, and much more. Thanks so much. Bye-bye.